We recently learned that an analyst predicts that the price of a share of Tesla will reach $250. Tesla will always have supporters and detractors, and as a result, its valuation will fluctuate between extraordinarily high and cheap. To learn more about this, be sure to keep watching and tuning in. Critics and supporters will never stop debating whether Tesla is a cheap or expensive stock. There will always be some who think Tesla is an expensive stock because, well, good news about the EV company can't come from everywhere. You'll see why Tesla stock will reach $250 per share in today's video. According to Craig Irwin, Tesla has everything that Toyota doesn't. Craig Irwin is a senior research analyst and managing director who oversees Roth Cleantech's coverage of biofuels, cutting-edge lighting, and businesses that supply goods and services like batteries and electric cars that make the future useful. Irwin began covering clean tech firms in 2001 while working at Wedbush Merrimack, Current Ford, and First Albany. Prior to joining Roth Capital Partners, he was an equity research specialist for these companies. Additionally, he accomplished the purchase of top energy storage and technology companies while working as the director of corporate strategy for a publicly traded energy storage company. Irwin's stock coverage indicates that he is targeting $250 as his price goal, is holding the stock, and projects a 62% success rate. He declared that EVs are the way of the future and that Tesla is a fantastic company. This assertion runs counter to his assessment of the top business. Since he only has positive things to say about Tesla and has a very low price projection for the firm, especially now that it is trading in the $800 range, many of his statements regarding the company are actually highly contradictory. In fact, added Craig Irwin, I encourage everyone to at least test drive an EV if you're considering a new vehicle purchase, a Tesla or any one of the other several great vehicles on the market in your local markets. Irwin's statement suggests that while Tesla is a worthwhile investment, there are other outstanding firms to take into account. In essence, he's arguing that while Tesla is a fantastic alternative, there are superior ones out there. I just see Tesla as egregiously overvalued, he added, comparing the company's $800 billion valuation to that of the largest automaker in the world, Toyota, which sold about 9 million units and is valued at $200 billion. Tesla is going to do maybe 1.5 million units this year. There's just a big gap, he said, that Toyota and Panasonic have a far longer standing partnership than Tesla's, and that if Toyota so chooses, they may release equally attractive EVs. Immediately after declaring that Tesla cannot compete with Toyota, he went on to praise the company. They do deserve credit for really impeccable execution for pushing technology into the market, he remarked, referring to the manufacturer of electric cars. However, Tesla lacks nothing that Toyota does. While praising Tesla, he made it clear once more that, despite its greatness, the corporation is not that great. As a matter of fact, Irwin expressed his opinion that there are numerous other options that are far better. There will be a value trade in the market, he stated, and it is obvious to me that while Tesla is an excellent company, there are many other excellent EVs. I know a lot of my friends, clients, and coworkers now drive Tesla, so you can appreciate the car. I also drive an electric vehicle. However, in response to the question of what kind of vehicle he drives, he gave a hazy response, saying it's a German EV. Then he went on to say that he does enjoy American cars, citing Ford in particular, as well as the fact that he frequently sees EVs at charging stations. However, many have pointed out that although he can occasionally name brands such as Ford and Toyota, why is he unable to name the brand of electric vehicle that he is now driving? He previously stated that there are other manufacturers that are far greater to Tesla, but since he wouldn't give away his present vehicle, he is unable to identify them. Krieger famously remarked, "People who buy Tesla products love them, and the company has a great brand. I simply feel that the stock is too expensive considering that by 2025 there will be more than 500 electric vehicles on the road," although he acknowledged that Tesla will eventually be present in a sizable portion of the EV fleet. He does not believe it will control the market as most do. Irwin brought out how other businesses are moving quickly in the EV sector and have competitive products to Tesla's when the topic of Cybertruck, the futuristic-looking truck that Tesla hopes to deploy by mid-2023, came up. There will be a lot of really cool electric trucks coming, he declared. Whatever your company does, Tesla will provide that. It is possible for others to do the same. Rivian really does have a nice automobile. While acknowledging that Tesla is a global leader in the development of electric vehicles, he cautioned that consumers should exercise caution because better solutions will become available in the near future, particularly with regard to investment. Overall, even if Tesla is a fantastic and competitive firm, According to Craig Irwin, investors and EV aficionados have better options. This is the rationale behind his $250 price prediction for Tesla. Which other companies, in your opinion, are producing electric vehicles at a rate comparable to that of Tesla? Please share your thoughts with us by posting a comment below. Tesla, as Elon Musk compares analyst Craig Irwin of Roth Capital to Steve Jobs of Apple. He'll be the most important person at Tesla for the next 20 years, Irwin stated. I think the outlook is actually pretty good for Tesla, but Tesla, I would be trading Tesla for a miss year during a live Yahoo Finance conversation. In fact, I believe they're pretty much set for the upcoming quarter regarding his prognosis for the upcoming quarter. He stated that while it is difficult to predict exactly what they will do, he wouldn't be shocked if deliveries increased by 15% to 20% on a sequential basis. Craig Irwin asserted that new competitors will cause Tesla's $1 trillion valuation to decline even in 2021. Irwin referred to Tesla's announcement, which stated it will immediately suspend all hiring and shift its focus to hourly labor, as a blessing in disguise for the electric vehicle EV industry. He claims that the news is not the result of a decline in interest in Tesla automobiles. On Squawk on the Street on CNBC, he stated Tesla Inc. is an extremely well-run company. It's hardly shocking that they are concentrating on cutting costs right now. Long-term demand hasn't really changed, in my opinion. Electric cars are a given. Irwin believes that the over 10,000 Tesla workers who find employment with other electric vehicle businesses will actually be a boon for the industry as a whole. Irwin's prediction for Tesla stock is higher than that of other experts, even though their revision is lower in dollars. As forecast, Cohen projects that Tesla's shares will trade at $733 in July 2022, while Bank of America will trade at $950, Mizuho at $1,175, Canaccord at $815, and Deutsche Bank at $1,125. The estimate for 2022 as a whole is $959. The estimate for 2022 as a whole is $900. Negative aspects of the market, such as interest rates and other economic variables, competition and rules, taxes and fines, could nevertheless have an impact on the Tesla stock forecast for 2022. Positive aspects, on the other hand, include the Austin and Berlin gigafactories, the Starlink project, and aggressive manufacturing. The most recent financial report for the second quarter shows notable advancements as well. Model SX deliveries are up 753%, and Model 3Y deliveries are up 20%, with a 27% increase in total deliveries. Revenue for the first quarter is up 42% as well, although regulatory credits are down 3%. First quarter sales is up 43% when regulatory credits are excluded. The prior quarter's free cash flow was maintained, while adjusted EBITDA increased by 52% and adjusted EBITDA margin increased by 159 basis points. When it came to overall earnings, most of Tesla's performance exceeded predictions. Due to the stock's strong demand throughout the world and the sharp increase in oil prices, the majority of analysts are upbeat about the company. Additionally, Tesla has handled the lack of chips better than most of its rivals. Finally, the opening of the new Gigafactory in Berlin strengthens Tesla's capacity for engineering and production. Please watch our other videos and visit Tesla stock. Don't forget to hit the like and subscribe buttons.